Hey, welcome to Sarg'sBriefing. How are you today? Okay, two things I want to talk about I feel is important in the industry as we come to an end of 2009 is mortgage-backed securities and how that it affects our interest rates. And second, the first-time home buyer's tax credit. So first off, last year, the federal government agreed to put into the stimulus pack and buy mortgage-backed securities. The initial amount was $1.25 trillion. Now, with last week's purchase of mortgage-backed securities of $16 billion, that leaves about $1.08 trillion left, or has been used. So that leaves us with about $163 billion left. At the rate they're buying weekly mortgage-backed securities, that means that that program should come to an end the end of February, 1st of March. Now, what does that mean? Well, first off, we're going to see lots higher volatility in the market, especially in the first quarter, and we may see midday rate changes drastically. And as that program comes to an end, we're obviously going to see some rates go up because we all know we've enjoyed 4.5% to 5% interest rates for the last year, and everybody needs to be aware that they've been subsidized by the federal government, helping us with our economy. And of course, that can't continue or shouldn't continue. And hopefully, our economy will, be back up on its feet, as some indicators are now showing. So we want to watch out for that. And secondly, we don't want to get caught in the trap. Now, so if buyers are snoozing, they may lose, and I want to help avoid that costly mistake. So what happened to our interest rates? Well, if you watched them closely, the last 2 weeks of December has not been good. And of course, now that we know that mortgage-backed securities have an effect on that, what happened is that they bought a large amount through the holiday, and there was nobody there to buy them. And then also we had some stronger than expected economic news, which was good. Now, what that means, the stronger the economic news is good for our country, but it's not good for mortgage rates. So, for example, next week the job employment report comes out, and that comes out on Friday, and I'll be watching that really close to see if I need to lock rates for some of the clients that we work with currently. And for example, if it's less, then that's good news. That's good economic news, but yet that may affect our interest rates. So just to give you a couple ideas of how this all works, and of course the mortgage-backed security program should be coming to an end, so we really want to not be left on the fence and have to pay a higher interest rate. So if you're on the fence, let's go ahead and get into your mortgage loan officer, get pre-qualified. Okay, so more good news economically is the Federal Housing Financial Agency posted its first quarterly increase since 2007, which that's good news, and that the home price index rose 0.6% in October. Now, what does that mean? Well, out of the last 6 months, 4 of the last 6 months have showed a price increase on housing, which is another indicator of economic good news. So we've learned today that also means that rates will be on an increase up. So we're kind of in a situation going into the new year. We've got home prices that have fell and starting to rise. And with the mortgage-backed security program, the federal government's helped subsidize over the last year, those artificial rates will be coming to an end. And with the two combined, now's the time, as you can see, to go ahead and get off the fence and make your purchase, get in, see the loan officer, and get pre-qualified. Okay, so the other last thing I wanted to talk about today was the first-time home buyers program, the tax credit. And that, just a couple of things that I want to share with you there is, first of all, is for first-time home buyers. They're going to still be able to get $8,000. And a couple things that you need to be aware of on deadlines is that it is extended to June 30th of 2010, but however, you've got to have your contract in place no later than April 30th of 2010. Now, in that extension, President Obama signed in November. Some good news came from that is if you do own a home and an existing home, you can go ahead and qualify for $6,500, and the same deadlines apply to you. So along with all of the extensions and tax credits, and potentially the rates going to be increased and home prices starting to now come around, now's the time, as you can see, to go ahead and make your home purchase, to either move up or down, or lucky enough to be a first-time home buyer, to enjoy your first home. So anyway, hey, thanks for sharing this information with me. I hope that it's been useful for you. And for more information on these topics, go ahead and see down below. I've given a live full blog information. You can go ahead and see those, read them. Have any questions, be sure to reach out and call me. Be glad to. Be safe tonight, and Happy New Year. Thanks so much.